Broker Bulletin acknowledges the traditional custodians of all the lands across the country on which we record our podcast and pays its respect to all Aboriginal and Torres Strait Islander people. Welcome to the Broker Bulletin podcast, where better begins. Join us as we chat with brokers about what's working for them, what drives them, and the real challenges and wins that matter most right now.
Hi everyone, and welcome to another episode of Broker Bulletin. I'm Onur Kocabay from Build Invest Grow. Today we're diving into a part of the lending world that's really gaining traction, but often feels a bit complex at first glance. Lending to non-trading companies and family or discretionary trusts. To help break it all down for all the brokers listening, I'm joined by Jeremy Cockram, Head of Lending and Product at Apollo. Jeremy, thanks for joining me. Let's get into it. Let's start simple. What exactly are we talking about when we refer to non-trading company or discretionary trust lending?
All right, good question, Onur. So when we talk about non-trading companies and trusts, we're talking about entities that don't actively trade or generate income from day-to-day trading activities. They typically just hold assets like property or shares on behalf of beneficiaries or shareholders. So a non-trading company or a corporate trustee is the legal owner of an asset, but isn't a business that trades day to day. Like a normal company, they have directors and shareholders. Whereas a trust is a legal structure that's made up of trustees and beneficiaries. So the trustee is responsible for managing the affairs of the trust, and they make all the decisions on the trust. And they have to act in accordance with the trust deed and make sure that the trust is running for the benefit of the beneficiaries. And the beneficiaries really simply are those who benefit from what's happening in the trust. So when we talk about non-trading company or trust lending, we're talking about investment loans that are taken out in the names of these companies or trusts to purchase investment property.
Why are we seeing more investors and buyers leading into these structures right now? What's driving the growth?
Overall in the market, we're seeing a lot more investors make up a bigger portion of the market overall. So around 5 years ago, the RBA data tells us that there was about 30% of market flow were investors, but now it's up to 38%. So it's quite a significant growth. You're talking about an extra $50 billion worth of investment.
Yeah, wow.
Growing in the market overall. So we're seeing investors grow as a proportion, and then we see a lot more trust and company lending as well as a part of that. And there's a few reasons why people utilize trusts and companies overall. So one of the reasons is to minimize their tax. So there's some tax benefits that you can get if you utilize a trust to use to park your investment property in. There's also some asset protection that you get. So if you're running a small business, you might want to separate your personal risk and your business risk by using a trust or a company to purchase your investment property.
Awesome. It looks like there's a lot of benefits that come into that as well, but I'm assuming there's a lot of responsibility as well, which a lot of the investors will need to do. What sort of clients are using trusts, and are they common traits or financial goals brokers should be looking out for?
Good question. So you usually see a lot of the more established and savvy investors are the ones that are using trusts or companies, as well as those who are self-employed or small business owners. So for investors who want to be able to separate all of the risk associated with individual investment properties, they might have multiple investment properties and they put each individual investment property in a trust, in a separate trust. So that way they separate the risk of each of those investment properties. Or if they're running a small business, they want to separate the risk. Also, if the investor knows that they're going to be positively geared or selling that property for capital gains in the near future, they might want to utilize the tax benefits that come along with using a trust. So they'll purchase that investment property in the name of a trust rather than in their individual name.
It sounds like there's a really good benefits to doing trust, but also knowing what to do and so forth. So I guess the next one is trust structures can sound complex. In practice, what does a good trust lending solution look like from a lender side?
So from a lender side, I think we want to provide the brokers a really easy application process. It can sound complicated on the outside, so we want to make sure it's as simple as possible. So having a really simple way for brokers to be able to lodge a deal with us, really clear information for the brokers to know exactly what information the lender needs to see to be able to assess the deal. Lenders should also make sure they have a common sense approach to how they assess trust income and guarantor income. And they need to also just have a flexible and a pragmatic approach to how they assess a trust or company deal, because there's not really a one-size-fits-all approach. They tend to be more varied in terms of their structures and the scenario and what the client is trying to achieve than a standard loan with two borrowers and all in the individual name.
And how do you at Apollo approach trusted non-trading company lending? What are you looking for in a deal?
So at Apollo, we always make sure we approach the deals with a commercial mindset. We really want to make sure that the broker can get the deal done on behalf of the client. So we're really just looking for good borrowers and a loan application that services and makes sense. So our Apollo Plus product supports a range of income verification methods, for example. So we do both full and light doc. So where you've got a client who's self-employed and they're looking to use light doc, but also a trust or a company, we want to be able to support those self-employed borrowers, which are the income verification method that they want to use. We also have really strong borrowing power. So we assess income based on interest before earnings and tax rather than net profit after tax. So that can make quite a big difference in terms of how much of that trust's income we're able to use for servicing. We also do it with add backs and before disbursements. So if the trust is going to make disbursements to the beneficiaries of the trust, we don't consider those. We just consider what the trust's actual income is. That can also make quite a big difference to how much income is utilized to be able to make the trust deal work.
I mean, from personal experience, you guys make it really simple and there's a lot of different ways you can verify. So I definitely 100% can see how you guys have done that really well. So where do you see brokers most often get stuck when it comes to trust lending?
So one of the really simple ones is just misunderstanding who the borrower is. Sounds simple on the surface, but it's not always quite so straightforward as to whether it's the trustee or the trust that is actually the borrower. So if you have a family trust or discretionary trust where you've got a corporate trustee, which is where the trustee is a company rather than another individual, you'll have the company trustee will be the actual borrower on the loan. Just understanding that and how to actually submit that in your loan application is quite important for then the lender to be able to correctly assess the deal. Also, not understanding the trust structure and type. So there's a few varieties of trusts out there. You mentioned family and discretionary trusts, and unit trusts. They're the main types that are out there. There are a few others. Generally, most lenders only accept unit and discretionary trusts rather than other types of trusts. So it's good to have a read of the trust deal and make sure you understand exactly how the trust is set up before you submit, because if you're not too sure, you should check with the lender and make sure it aligns with their policies. You also want to make sure you provide the right trust documentation. So you've got the original trust deed. That way the lender will be able to have a read and make sure it's within their policy as well. And sometimes it can be a little confusing around who needs to be the guarantor on the loan. So if a trust can't service a deal in its own right, and that means it doesn't earn enough income to cover the loan repayments all on its own through the rent from the investment property, generally you'll have the directors of the company or the trustees also go guarantor on the loan. That doesn't mean they're putting up their own properties, so they're not providing a security guarantee. They're actually just providing an income guarantee, so to help the loan service.
How can they get unstuck or ensure they get it right from the beginning?
One of the main things the brokers should do is review the trust deed before they submit their application. That way you understand its basic structure and type. Usually on the first or second page of a trust deed, you'll be able to see the name of the trustee and the name of the trust. And that will give you, the broker, pretty good guidance on the type of structure that it has. They should also just make sure that the loan services and whether they need the guarantors to also help service the loan. That way they know when they submit the deal how to actually structure it. And always talk to your BDMs and the lender you're dealing with just to make sure you understand any of their specific policy niches. For example, Apollo doesn't require beneficiaries of the trust to be guarantors on the loan, whereas some lenders do. And some lenders accept all trust types, but most lenders only accept unit and discretionary trusts. So you really want to understand all of the different niches before you submit your loan application.
Are there any misconceptions about trust lending that you think the industry needs to shake off?
Yeah, I think there's a misconception that trust lending is really complicated and it's just too hard to do. I think once a broker gets one deal under their belt, which is just a basic trust with a company trustee and directors, like two directors, which would be probably 95% of trust lending. Once they've done one of those, I think they'll be really comfortable with just, it's not that much more complicated. There's a little bit of experience it takes to make sure you know exactly how to submit that type of deal, know what to look for, like in the trust deed, for example. But once you've done one of those, I think a broker will be super comfortable with doing many more. I think there's also another misconception that trusts are usually for the ultra wealthy. You know, there's not just for trust fund kids. There's a lot of mum and dad investors out there who would benefit from the tax minimization that you get through a trust or from the asset protection as well.
And for brokers looking to build their confidence in this space, what's the best way to get started?
So the best way to get started is to submit a deal with Apollo Plus. So there's a great team of white label BDMs at LMG that can help you. There's also a great team of BDMs at Athena to help you get your first deal across the line. And you've got a great credit team as well at Athena that will help you structure the deal out answer any questions before you submit it to make sure it's within policy. You know exactly what to do in Loan App to be able to submit it to us, and we'll help you get your first deal across the line.
And looking ahead, how do you see the part of the market evolving over the next 12 to 18 months?
I think investor lending will continue to be a significant portion of the overall market, which will mean that trust lending will continue to be really important. I think there's still a lot of confidence in the Australian property market overall that will see investors continue to invest in property in Australia. And so those experienced and savvy investors are going to continue to utilize trust and company lending to get those tax benefits and asset protection that it offers.
From a broker's perspective, what red flags or green lights should they be paying attention to when a trust is involved?
So some of the green lights a broker should look out for is making sure that they have a valid trustee that's properly documented with the right accountant and legal oversight. That way you know you're working with a trust that's in accordance with all the right laws. You're looking for a corporate trustee that is in good standing with no ATO issues and has an ASIC status that is current. You should have all of the beneficiaries clearly identified, and when they're taking out a loan, it should be obvious that it's for the beneficiary's benefit. And clients should have a really clear and identified investment strategy that they're looking to utilize in an investment timeframe. So they should know whether they're going to be keeping the property for 20 years or for 5 years and then looking to sell. One of the things that's worth mentioning is that there's no negative gearing benefits of having an investment property in a trust. So you can't distribute losses from a trust to the directors or the beneficiaries. You can only distribute income. So it's not suitable for everyone. So if a client is expecting to use negative gearing and they're saying they're going to use a trust, that would be something to look out for. Some of the red flags to look out for is to understand the different trust types that it is. Like I said, lenders only typically lend to unit or discretionary trust, not other types of trust. And generally, corporate trustees are preferred over individual trustees. So if there's an individual trustee, just make sure that the lender you are planning to submit the deal to accepts individual trustees as well. And they should also just look out for if the trust is going to be renting the property to family members at less than the market price, because there's tax implications there as well.
At Broker Bulletin, we're all about finding those 1% improvements that lead to big wins. What's one small thing you do every day that has the biggest impact on your performance?
My number one thing I do is I treat sleep as sacred. So it's the most important thing to make sure that you're performing at your best. So I can be a good dad and a good partner and really smash it at work as well. I make sure I have good sleep hygiene practices. So I go to sleep at a pretty consistent bedtime. I avoid screens before I go to sleep. Don't have caffeine too late in the day. All of those things really help me have a good 7 to 8 hours of solid sleep, and I wake up the next day ready to go again.
Oh, well. And do you actually go for a particular amount of hours? Or?
Yeah, I usually go for 7.5 hours.
7.5. Okay. And when is the last time you have caffeine?
I have caffeine anytime before midday. Then after midday, no more caffeine.
Okay. And are we sticking to like 1 cup of coffee or 2 cups of coffee?
Two cups of coffee.
2 cups of coffee.
Yeah.
Okay. And screen time? How long
I usually turn it off for about an hour before bed.
An hour? Okay.
Yeah.
And have you been able to, how did you get to that?
I used to have terrible sleep.
Okay.
So
define terrible.
I used to sleep 5 to 6 hours and I wake up and I would feel tired. And so I made a lot of these changes to help me get a really good sleep, and then I perform a lot better during the day.
Oh, well, awesome. Well, thank you so much for sharing that.
Yeah. Thanks for having me.
To wrap up, my biggest takeaway from today's conversation is trust lending is only going to get bigger. Make sure you're across it. Make sure you know your stuff, but also do your due diligence up front before going to a lender. And if you need help, make sure you become a lot more resourceful to ensure that you know what you're presenting to a lender. Thanks so much for listening. If you have a topic you want us to discuss, please email us at brokerbulletin@lmg.broker or DM us on Instagram @lmg.broker, and our producer will make sure we answer it ASAP. If you like this episode, make sure you rate and follow us in your favorite pod store.
Thanks for tuning in to Broker Bulletin. We would hate for you to miss an episode. Subscribe to Broker Bulletin in your favorite podcast app. Has this episode been helpful? We'd love you to rate and review us. It'll help us deliver content that's useful to you and help others discover us. If you have great ideas for topics worth tackling or have burning questions you'd like addressed on an upcoming episode, reach out. Links in the show notes. See you next time.